So last year, we were seeing growth of 25%. So anything growing 25% is just massive. Like that's exponential growth. I wasn't probably sustainable in terms of how much demand we are going to bring in as a big piece of the sort of declining occupancies. Now we're seeing supply growth of about 13%, which is much more, I'd call it absorbable. And so 13% supply going in is still a lot. And for comparison, the hotel industry supply is only growing by 1%. So
Wow.
13% versus 1% is just entirely different. But we're seeing demand growth of 10%. So most of that supply is getting absorbed. We're able to accommodate more and more travelers. So overall, I'm I'd say we're getting into that sort of sweet spot of not too much supply growth, but enough supply growth to continue to accommodate all the people that want to come into this industry and be able to stay in short-term rentals.
Welcome to Short Term Rental Solutions, a show for hosts and property managers looking to overcome obstacles, maximize revenue, and optimize their short term rental business by learning from the innovators who are designing the solutions that are shaping our industry. Hello, everyone. Welcome back to the Short Term Rental Solutions Show. We have a great show for you this week because we are fortunate enough to have Jamie Lade, who is the Chief Economist and Senior Vice President of Research with AirDNA. And today's topic is all about how to use data to help us in our real estate investing and also to optimize our operations. A crucial topic for anyone in the industry, and really important that as we are investing and as we're running our business, we aren't just flying by the seat of our pants. We're making decisions that are truly based on the information and the data that's available to us. So, Jamie, so glad you're here and thanks for joining us on today's show.
Yeah, thanks so much for having me. Excited to be on and talk about data.
Yeah, that's really, your jam and what you're all about. So, for people who may not know you, just take a minute and introduce yourself and tell us a little bit about your background and how you found yourself with AirDNA.
Yeah, so I joined AirDNA 3 years ago, back in October of 2020. And prior to that, I spent 10 years as an analyst covering the hotel industry. So as a hotel economist, worked for CVRE and ran the sort of global forecasting shop there. As part of that job, got really interested in the impact that short-term rentals, vacation rentals were having on traditional hotels. Was one of AirDNA's first clients back in 2015, sort of getting access to that full data set and digging into the trends that were happening. And was fortunate enough to join full time, as I said, in 2020. And now I'm in charge of research, data, and analytics for the firm. So we dig into the trends, broad trends that are happening, local trends to help people really understand where we're at in the cycle, where it most makes sense to be deploying money, and then how to optimize your rentals once you have them.
That's great. And I want to just let everybody who's listening today or maybe watching us on YouTube know that in addition to sharing all kinds of helpful information for us, at the end of the show, Jamie is actually going to stick with me here and he's going to take us into AirDNA and kind of give us a little tour of the platform. They've had a lot of really exciting changes that have recently come out. And so he's been good enough to agree to kind of walk us around and help us understand the changes and some of the resources and tools that AirDNA provides. So be sure to stick around to the very end of the show. And if you're listening to the podcast portion, follow us over onto YouTube, and there you'll be able to pick up that portion of the show. So, Jamie, as we get started here, real quick, I know that earlier this summer, there was a lot of chatter online and throughout the media about people projecting and saying that Airbnb is about to collapse and that short term rental operators were, stays and revenue was just dropping off a cliff, and the
Mhm.
term Airbnb bust kind of got coined. And you were one of the ones that stepped up and really helped contribute meaningfully to that conversation with research and really data driven perspective. So I feel like I would be negligent if, given the importance and the impact of that for so many people, particularly real estate investors, I feel like that really is a question that's worth asking you and letting you chime in and providing context to where the market truly is and what people should be considering as they're looking at real estate investing, particularly in the short term rental space.
Yeah. So as a short-term rental data analyst, anytime a tweet goes viral that's sort of talking about short-term rental data trends. Like, and one, it gets me excited, and two, it wants me to dig in and see if I can replicate the analysis and sort of explain deeper what's happening. And this one sort of got started on a Tuesday night. It had a few 100,000 views. I saw it and immediately was just like, that doesn't make sense. So that was about 5 p.m. Put my kids to bed, came back. It had like 3 million views over that short, just couple hour time frame. I was like, all right, we need to dig into what's happening. Why is this going viral? And what does the data actually show? So that tweet by Nick Gurley had sort of showed that short-term rental revenues were collapsing and across the US, 40, 50, 70% in some markets. And that collapse in revenues was going to cause Airbnb vacation rental hosts and owners to start selling their units and cause a collapse in the housing market. Now, I'm so many things wrong with that. One, just like we're not seeing a collapse in short-term rental revenues. Are we seeing a decline? Yes. And we've seen a decline now of 19 consecutive months of occupancies. We did hit a high in 2021, and that's going to be a high watermark for years to come. Sort of unique interaction with supply demand, supply contracting through the pandemic. Demand came back really strong in pandemic recovery, and that pushed occupancies to record highs. We're coming down off of that some, but for example, for those markets where they're showing a 40% decline on average, we're only showing a 4% decline. So not nearly the dramatic sort of narrative that they were sort of calling out. I have no idea how they were able to manipulate the data to do that, but that's in no way what we're seeing. Yes, some softness, but not nearly a decline. And then to say that a decline in short-term rental revenues could cause a collapse in the overall housing market worse than the subprime crisis is sort of laughable on its face. And short-term rentals make up such a small percent of the overall housing market, and way less than 1%. So anything that's happening in the sector is not going to have a meaningful impact on the overall US housing market.
Yeah, well, I mean, as you just said, there has been a little bit of decline in, occupancy and revenue. How does a real estate investor, take in that information and know whether it's still the timing is still right to be continuing to invest?
Yeah. So one thing is to look at historical trends, and that's something that AirDNA we sort of pride ourselves on being able to provide a long time series of data. So starting in 2019 through really the peak at the beginning of 2022, there was a 35% increase in revenues. So average revenue per available listing. We've now come off about that, about 5%. So we're still, as we sit here in back half of 2023, 30% above 2019 revenues. We are 5% above 2019 occupancies. We're 25% above on ADRs. So the sort of run up in performance, and how I describe it, is persistence at the peak. So just because we've sort of reached peak performance doesn't mean we've got to sort of go skiing off the backside of the mountain. And we're going to stay here, and I suspect we stay here for a while. And our forecast is for another 12 to 18 months, sort of at this peak, sort of slight declines, but no collapse. And then we start growing off of this, come back end of 2024 into 2025.
Yeah, well, and obviously I don't have the depth of data and background information, but just kind of anecdotally, I feel like even outside of the short-term rental industry, as I, am a traveler myself and I'm occasionally staying at hotels and stuff, I feel like that increase in nightly rates has been pretty broad across the entire hospitality sector and not just in short-term rentals. So if the whole industry wide is supporting that rising nightly rate, I think that it's just, you can kind of do a gut check and anticipate that things are likely to, persist as you were saying.
Yeah, and as a recovering hotel analyst, I'm still sort of keeping track on that sector. So while last summer was the real summer for rise in short-term rental rates, so ADRs, average daily rates, were increasing 10% last summer. This summer, they're flat. We're essentially flat to slightly declining. So we're not getting any increases, all the while the hotel industry is getting about a 5% ADR bump. So that is helping with some of the affordability concerns for vacation rentals, given that hotel rates are now rising at a pretty significant clip.
Yeah, so maybe some of the original, driver for people entering and considering doing an Airbnb stay for maybe their first time years ago was that they felt like short-term rentals were more affordable option than hotels, and then the short-term rental nightly rates spiked, and people began to think, "Well, maybe a hotel is a better option," and, what I think I hear you saying is that maybe that's beginning to flip again, and that as the hotel nightly rates creep up, that Airbnbs and short-term rentals, I shouldn't say Airbnbs. I know everybody hates when we call them Airbnbs. Short-term rentals will, kind of begin again to look more appealing for people looking for an affordable way to travel with groups and, all those other types of things.
Absolutely. And we just did a big study this past summer on the sort of competition between hotels and short-term rentals. And the price competition is really heating up. And that's one of the sort of tips that I sort of suggest to people is when you're pricing your short-term rental, not just looking at how your competitors in the short-term rental space are pricing their units, but keeping an eye on how hotels in your area are pricing their units in a given night because depending on the type of unit, like if you have a two-bedroom condo on the beach, and like it or not, you probably are competing with the hotels in that market, and you've got to keep up to date with what's happening on those pricing trends as well.
Yeah. Okay. So, there's these kind of flash in a pan trends or chatter points that everybody talks about. But, you've been watching the industry as a whole for over 10 years. What would you say are some of the North Star indicators or the things that we should consistently be looking at and are reliable kind of over the long run and that we can peg our real estate investing to?
Yeah, one is just the broad-based increase in demand into our sector. And so we consistently hit records in terms of number of nights sold and people staying in short-term rentals year after year after year. Yes, we saw a decline in 2020. We had fully recovered by 2021, and now we're hitting new records again. And relative to overall stays that are happening in lodging, short-term rentals are pulling back share and continuing now to grow share in terms of overall stays. So the traveler preference is changing. We had more people try short term rentals. So back in 2020 and 2021, as many as 40% of stays that were happening were people staying in a short term rental for the first time. And that was an amazing sort of introduction. People were maybe afraid to stay in a hotel trying short term rentals. And one of the things that we were harping on is quality, consistency of making sure that when a guest stays for the first time, they're gonna wanna come back. And that's something that I feel like we've done decent at. Average, guest review scores were at all-time highs in 2020 and 2021. I think a big piece of that was people sort of just happy to be traveling again, and so that's one demand. Number 2 is just overall supply and that we continue to offer and evolve the type of units that we're providing as an industry to where the demand's going. So throughout the pandemic, and we saw more and more demand for larger homes for people that wanted to stay in short-term rentals. So that's important as an investor and to be looking at the data and say, and get a sense of like where is occupancy the highest, where is there excess demand, and where could more supply be absorbed into that market. And I think as long as we're looking at the trends of the types of units people want to stay in, we saw a huge growth in sort of unique stays, sort of yurts, tree houses, sort of building on that trend of and the types of units people were looking to stay in short-term rentals. And that to me is sort of broad-based good growth, sort of yeah, it's sort of adapting to what our guests want, and that I think is really key for growth going forward.
Well, and it will be interesting to see how much like those new first time short-term rental travelers, how much more of that is still kind of latent in the market. People who, are still haven't ever done a short-term rental stay.
Mhm.
And, obviously it's become pretty commonplace. The major OTAs have done a great job marketing and customer awareness. Is there really any way to quantify that gap of, the percentage of people who have already traveled and tried short-term rentals and I don't know if there is. That's a
Yeah.
totally off the cuff question that we can quantify what's maybe out there as far as first timers still yet to come into the short-term rental space.
Yeah, and one, it's one of those things that is quantified. And OTAs do studies. There's some survey shops like Morning Consult that do sort of brand recognition and sort of people that have tried short-term rentals versus not. And what we see is a really high adoption, really high name recognition. So as you sort of slipped and said Airbnbs, like, and it is a noun, it is a verb. I try to keep myself from saying that, but there's no getting away from the fact that short-term rentals are now in the zeitgeist of the country. Of it is a mainstream option now for stays, and as the big OTAs, like love them or hate them, they do so much just sort of brand marketing so of just getting people excited about staying in a short-term rental. And that is huge because you think in the past, like Expedia sort of or a Priceline, and a lot of the marketing was put towards sort of paid click advertising. So you search a hotel and they get their hotels, their site up in top. So that's someone that already has sort of intent to travel in a hotel, where a lot of the marketing that Verbo and Airbnb did over the past 2 years is just getting people excited about traveling and traveling in a home. And that I see as just marketing that's going to sort of lift everyone's and tide lifts all boats. Like it's bringing more people into the space. And that continued focus I see as just great for the industry in general.
Yeah, well, because there are still people eager to invest in short-term rentals. And so you guys are seeing the data reflect the fact that there's more and more listings coming online every year. And so in order to be able to absorb and really keep the revenue and occupancy at a number that makes sense, there needs to continue to be increased, travelers who are going to be able to, have stays and make that make sense.
Yeah, and that's and a good point too of I think fortunately we're seeing for at least everyone that's out there hosting now, we're seeing a slowdown in supply growth. So last year, we were seeing growth of 25%. So anything growing 25% is just massive. Like that's exponential growth. That's I wasn't probably sustainable in terms of how much demand we are going to bring in as a big piece of the sort of declining occupancies. Now we're seeing supply growth of about 13%, which is much more, I'd call it absorbable. And so 13% supply going in is still a lot. And for comparison, the hotel industry supply is only growing by 1%. So
Wow.
13% versus 1% is just entirely different. But we're seeing a demand growth of 10%. So most of that supply is getting absorbed. We're able to accommodate more and more travelers. So overall, I'm I'd say we're getting into that sort of sweet spot of not too much supply growth, but enough supply growth to continue to accommodate all the people that want to come into this industry and be able to stay in short-term rentals.
Awesome. Okay, so if I was a real estate investor, I'm wanting to purchase another short-term rental and be investing in short-term rentals. Say you're planning to make a purchase in the next 3 months or so. What
Yep.
would you be doing? How are
Yeah.
you going to be trying to decide where to invest?
And one is really keeping an eye on housing prices because it's such a dynamic market with prices in certain markets decreasing and some markets decreasing pretty substantially. So markets on the West Coast and Austin, certain pockets around the country are seeing pretty wild swings in housing prices. So and all the while, short-term rental revenues are still sort of holding up in many of these markets. So there are going to be pockets of opportunity. I wouldn't say it's the broad-based opportunity that we saw in 2020, where essentially you could throw a dart and find a great place to invest, given the sort of subsequent increase in revenues. So really trying to find pockets within the country, and then even within markets, there's going to be certain areas that sort of make sense that have the type of supply that travelers want. That there's still investable assets where there is actually housing inventory. we know that's still a big issue of just finding homes available for sale and then running the numbers. It's more important than ever to make data driven investment decisions, not just investing in a home that you think is going to do well, but actually digging into the comparables. What are these properties earning? Were they earning in terms of occupancies in prior years? And what I'm making and relevant investment choices going forward.
Yeah. All right. I'm going to pivot our conversation and talk a little bit about operations. So, what do you consider the most important data to be tracking or data points that a host or a property manager should be keeping an eye on from an operations perspective?
Yeah. And can I throw revenue management into operations?
Absolutely.
Yeah, so we do provide and quite a few revenue management tools, and that's something I harp on more. I'm really heavily on today, given the sort of falling occupancy dynamic. Is when supply is increasing, there's more competition for guests. You've got to be on top of sort of revenue management for your listings, because it could be the difference between 5% on rate of whether your unit's getting booked or not. So you've got to and keep an eye on how your competition is pricing, how the competition is pricing any given night, and what is the lead times for your market? What are the lead times based on the season that you're in? When you should be expecting people to book? Are you getting bookings during those times? And once you sort of and pass that booking window of and based on the lead time of whether or not you should have gotten booked, of adjusting your prices accordingly, because there's no point in sort of holding on to that rate with sort of all your might that you think I got that rate last year. I'm going to be able to get it again this year. And there's no getting around the fact that competition has increased and you've got to sort of continue to adjust your pricing strategy to make sure you're maintaining your occupancy and maintaining the revenue that if you're a property manager that your owners expect. And if you're an investor, I'm making sure that you get booked because once you get past that stay date, there's no getting that potential revenue back.
Yeah. Well, and I'm going to repeat something that I heard you say, and that's really understanding the pacing for your market. I mean, that is one of those key points when you're looking at revenue management and operations, understanding what that lead time and booking window is. And like you said, once you see that window approaching and then passing, it's time maybe to consider softening your prices so that you can get the bookings and the reservations. Is that correct?
Absolutely. Yeah. So it's and getting a sense of what that pacing curve is and then adjusting and getting a sense of like, all right, where are we at and how did I get booked?
Yeah. All right. So, let's talk now about AirDNA and some of the changes that have come. There's really been a pretty meaningful shift in, the offering of AirDNA and the way you guys are displaying the data. Tell me a little bit about what was behind that.
Yeah. So, one, we wanted to take a wholesale sort of restart on the app. We had first launched it back in 2016, and the industry has just evolved so much in the ways that people want to digest data, access it, and then just design has changed so much over these past 6 years. And a big sort of difference too was we had been acquired. So we changed ownership back last year and we were able to quadruple the size of the product team. And that gave us the resources to actually tackle this sort of rebuilding the site. And it's something that we're just so excited about. In addition to the design change, we also just changed the subscription model. So, where before you had to subscribe to one market and only have access to data for that one market, um, we sort of changed it so it's low cost per month and you have access to every market across the entire world. So for investors, like I harp and had been harping on all the time that you've got to really find the sort of sweet part spots to invest in. In reality, it was entirely too expensive to be able to use our site and actually explore different markets to be able to invest in. So we made that change. And then we also changed the design within the site. So made it more around the questions that you want to ask around the data and then be able to find those insights and then be able to display multiple years of data, be able to dig in. We created an entirely new section around market discovery. So you can
Mm.
actually find the top markets to invest in. So you can sort by occupancy, by ADR. You can look of Like if you're just interested in what are the top markets in terms of occupancy for 3-bedroom entire home rentals, like we thought we should actually make that available. And so you could just click on 3 bedrooms, entire home rentals, houses, and then sort and see the markets that are sort of best in terms of key performance indicators. And and then I'm yeah, there's so many things in there. I'll walk through at the end, but it was just we had all these great ideas. We knew we couldn't sort of just shove them into the old design, so we needed to start over, and that was sort of the emphasis there.
That's great. So, you know, also, what's on the horizon? I mean,
Yep.
there's been this total evolution already, and I think that you guys still have some exciting things coming along.
Yeah. So as of October, so maybe by the time people are listening, we'll have launched MLS data into the site. So this is for sale listings, what's actually available for sale in each of these markets. And then instead of users having to maybe go on Zillow or Redfin or homes.com and find available properties, take the address, copy and paste it into AirDNA, see what the earning potential is. We're going to do all that for you. So we're going to let you start with here's all the properties for sale. Here's what the earning potential is for all those properties. Here's which ones seem to have the best yield. So you essentially pre sort for the best opportunities that are out there. And then next, like let you actually spend your time digging into the data, making sure that they're relative comps, making sure that those are great investment activities. Essentially, I'm cutting out so many steps of the process to let you dive into sort of pre sorted, pre estimated investment opportunities.
That's gonna be
And
fun to play around with. I can't wait to try that out. I can imagine myself going down a complete rabbit hole just all over the country/world. I've always had this charmed vision of, investing overseas, maybe somewhere quaint and off the beaten path in Italy or France or something, and yeah, that's gonna be me. I'm gonna be on a Saturday or Sunday night just wasting hours of time looking all over the world on AirDNA. Yeah, that's gonna be tons of fun. Is it mostly just gonna be US-based MLS stuff initially, or do
y-
you anticipate that eventually it will kind of absorb the whole world? That's a gargantuan task.
yeah, I'm definitely starting with the US in terms of the for sale data, and then we'll eventually launch other countries where that data is accessible. It's not as easily accessible it's not even that easily accessible in the US. It took quite a bit of effort to sort of bring that data into the app, but we will be launching other countries. One of our goals is to go after Europe with intention in 2024, and you'll see more and more features that maybe launch initially in the US is moving overseas as well.
That's exciting. All right, so bringing in MLS information. Anything else?
Another one is zoning data. So regulation and zoning has been more and more important over the past couple of years. It can be like granular as like on one side of the street is zoned to allow short-term rentals, vacation rentals, and the other side of the street isn't. And as you're investing, like it's really hard to know that. So we've partnered with a company that actually goes through and collects all those zoning maps at a city level. And so we're going to bring that in. So we're going to be developing all these different custom map overlays that come into the app that allow you to just better understand the investment opportunity in each of these cities. So that's another one I'm really excited about. Another one my team's working on is forecasts of these cities. So instead of just showing you historically what happened, and I'm sitting in Rosemary Beach right now, but we're going to actually give you projections on where we think occupancy, ADR, RevPARs are going, how much supply, given the sort of dynamics in this market, do we expect to come in. So it's been a really fun exercise. I was able to build out a team of really smart PhD economists where they're actually digging into the trends, digging into the relationships and that happen in the overall economy. And we're going to be launching new and innovative forecasts for for the industry, so you can get a sense of not only what's happened, but what's expected to happen in these markets.
Wow, a powerful, powerful resource for real estate investors for sure. That's
Yeah.
amazing. Man, I'm such a nerd. I would probably just love geeking out with all of you guys and kind of being a fly in the wall in that room and hearing kind of how you guys are building this stuff out. And that's really exciting. Thank you so much. Well, I'm going to pivot here and we're going to let our podcast listeners go. And then we're going to continue our conversation. But Jamie, tell us how people can find AirDNA and find you if they have any questions or want to learn more.
Yeah, so I'm really active on both Twitter and LinkedIn. You can find me Jamie_Lane there. And then if you do want to be in a fly in the room, we do have a podcast of our own called the SDR Data Lab, where we talk about all the trends that are happening in the industry. Do we dig into the data on a weekly basis? So that's a fun thing that we've been doing for the past year.
And it's a great podcast. I am a subscriber. Happy to plug the show because I do enjoy listening to it. So, and before we let our podcast listeners go, one other thing is if you haven't found yourself over at STR Hub, make sure you take the time to go over there. We are really creating as a comprehensive resource for short-term rental industry professionals. Whether you're a host or property manager, we're pulling together information about all the companies and service providers out there to help you find the solutions for your business as quickly and easily as possible. So, obviously, if you go over there, you're going to find information about AirDNA and so many other companies that can help you optimize and really professionalize your short term rental business. So, come on over there to strhub.com and free guides, resources, articles, all kinds of helpful information to help you succeed and optimize your short term rental business. So, once again, thank you so much, Jamie, for joining us on today's show.
Yeah, thanks for having me.
All right. So, I'm going to actually take us off the screen so people can get kind of a full screen experience here. So, yeah, Jamie, just kind of walk us through the all new AirDNA.
Yeah, so as you can see when we jump in, it immediately takes you into an entire view of the world. And this is really contrasting the app before would sort of take you into Santa Monica, which was our free market. But now you can click into the United States or any country since now all users of AirDNA have access to the entire world. And then you're immediately taken into a both map and grid view. This grid view has a list of every single city that we have data on the markets, which incorporates the entire US. And then you get some key stats about that market. So, average annual revenue, occupancy, ADR. You can sort these markets by occupancy, by revenue, by average daily rate, and we can filter to different types of markets. So, let's say I just want to look at urban, suburban cities, and maybe let's only look at ones that have at least 500 units. And I want to sort them by market store. So, what are the best potential cities to invest in given that filter criteria? And then I can even go further and refine. So, I'm only interested in entire place, maybe houses as opposed to apartments or unique stays, two or three bedrooms. And then as I go down and sort of apply all these filters, I'm going to see the list of markets continually update and the metrics that are shown there update as well. And then I can see these markets, sort of the top ones by market score. I can sort them by occupancy, and whatever I'm seeing are going to then show up on the view as well. And then if I want to dig in maybe a little bit further, like I'm interested maybe only in markets in the Atlanta area. As I zoom in, it's then going to update the map and I'm going to see all the cities that we track. And now I'm going to be able to see, okay, here's each market and what the market score is for that area. And we're going to have some great new features coming out soon where I can update additional layers. I could see overlay zoning, and then I can still zoom in. And if I want to see the performance for specific properties, or how the market scores are for specific submarkets within that market, I can then keep zooming in and now I can see each listing in that market and what they're earning. So, really interesting way to find now the best markets to invest, not just sort of have to click on each market individually and see how they're performing.
Wow. That's actually very powerful and fairly straightforward, actually, it looks like. So, that what an amazing resource to help people who are looking to invest. And, it's such a kind of a crazy time to be investing right now, but by really being able to drill down and make a database decision, that is Amazing.
And that's just sort of the new realm. We call that sort of the market explorer tool. Once you wanna start digging into a market though, then you can click on that market, you could click on a specific submarket within that market, and now you can get into the data for that area. So, I had filtered on entire homes, 2 to 3 bedrooms. So now I'm seeing the actual performance of entire home, 2 to 3 bedrooms in houses in Cambridge. So I can look at, okay, here's occupancy for the past 12 months. It's up 4% over the past year. But then if I want to maybe go in and see, okay, how has occupancy performed in this market over the past 5 years? I can now see that each month, what occupancy was for each year over the past 5 years. I can dig into sort of supply trends. So for those 2 and 3 bedroom properties, how much supply has come into that market into that market. We can look at demand and how that's been playing out over the past few years. All this data is exportable. We can filter to just luxury versus economies, professional managed versus individual host, highly rated versus low rated properties, and see updated performance and time series data for all those specific groups. So, really allows you to dig deep into the data. I can see average daily rates by day over the past year. Really powerful data there. And just this past month, we've also rolled out for sale properties. So for the market that you've selected, you can now go in and see which homes are actually on the market. So here we're sorting by the newest properties in Cambridge. So you can see what they're for sale for, what we think they would earn as a short-term rental. And we're going to be rolling out all sorts of new features around alerts, sorting. Right now you can sort by newest, by price, by bedroom square feet. We're going to have ways to sort by yield, get alerts for properties that sort of meet your buy criteria. And then once you find one, let's say you love this 175 $1.1 million home, we can dig into the properties that were used as a comp for it. So we can use each property that was used in estimating that $119,000 revenue, see what our revenue projections are by month, how those have been sort of evolving over the past year. So we have seen the comps sort of really increase their trailing 12-month revenue over the past 2 years. And then you can see each of those specific comps down here that's used down below to get a sense of, okay, which ones are relevant, which ones aren't. Are there any that I'd want to throw out? And then for each of these, this is one of my favorite new things is we can actually see the history for each of these properties as well. So this is now past 5 years of history for that specific property, and we can look at occupancy, ADR, revenue. So if you're really wanting to dig in underwriting what a new investment might earn, we've now provided and the most comprehensive data for you to really dig in and understand what the earning potential is for properties and where you can understand by month what existing properties out there are earning today.
That's amazing, and I'm looking at the little breaks in that graph. Is that maybe where the listing was, temporarily inactivated or owner was
Yeah.
using it or something like that?
Yeah, typically when you see a break like this, it's when they're taking it offline. So, like, no surprise during the winter, it looks like this property comes offline, like, and maybe it got some and longer term bookings here, and then February, March sort of taking it off. Could also represent where they did some, and this is and Cambridge being a university market where they got some longer term rentals that maybe we didn't pick up in our modeling. So, but yeah, it's lots of, and then you can also look at the forward calendar for this property. So what we see out into the future in terms of weeks that and days that are getting booked, what they're booked at, areas that we see were blocked, and how the calendar looks going forward.
Wow. I mean, I could envision myself going completely down a rabbit hole on this website and just clicking market to market to market and then, like, getting sucked in looking at all these homes. "Oh, honey, come over here, look at this one," and really having fun. I don't
Yeah.
know. Even
And
people.
and that's one of the things we're really trying to do is make it more fun to discover the data that's in there. So one of my favorite examples, and just like we can look at for sale listings, we can also go in and look at every active listing out there and what it's earning and use all these same filters. So one of my favorite things to do, because I'm personally, I just love the unique type units. So those are like the lighthouses and the tree houses and the tiny homes. So we could maybe see what are the top earning unique type properties. Let's say one bedroom unique properties and see what they're earning out there. So there's 3,000 of them that we show one bedroom unique properties. We could sort by revenue or occupancy level and see this one's actually right near my house here in Atlanta, the Alpaca Tree House. It's an unbelievable property, generated $129,000 last year.
I'm
So
sitting here blown away that these yurts are making over 100K.
yeah,
Holy cow.
these yurts, yeah, Wimberley.
Now I'm like, how much does it cost to put a yurt up? Not much.
Yeah, these are near Austin. Those are interesting.
Wow.
You can eco resort, Drippling Springs. You can sort by occupancy. You can sort by review count. So what are the and this vintage Airstream in East Austin has over 1,000 5-star reviews. That's unbelievable.
Some maybe this person will stumble across the podcast and be like, "Oh my gosh, they clicked on my property." Yeah,
Yeah.
that is so cool. That's really, really fun. So, I was poking around on AirDNA and I saw that there's different subscription levels. And of course, you have like a super top tier level, and there's a pretty dramatic subscription difference. So, when someone chooses to subscribe in that, what really is like the major difference in what they're getting by choosing to go from like a $25 a month subscription to I can't remember what it is, but it's much,
Yeah.
much higher.
Yeah, the and that's I'm really to differentiate between sort of the average host, maybe investor with 1 to 2, 3 units, and then large property managers or large institutional investors. So one of the big differences is the detail that you're gonna be able to export out of the product. So with the sort of $1,000 a month subscription, and you'd be able to click on this page, so active SDR listings, it's not live yet, but it is gonna be in the next couple months, but you'd be able to click export and get this entire list of properties, all the details about them. You'd be able to see much more detailed historical data by property. You'd be able to and we can click on here and you can see some of the things. We're gonna allow some different aggregate views. So if you wanna see data for the entire US, just unique stays, and I wanna see occupancy for one bedrooms, and I wanna see that sort of aggregated in a view that's sort of outside of a city level, which is how we generally present the data. That's more meant for the advanced tier. So maybe you're I'm an institutional investor coming up with your business plan and trying to sort of look at sort of long-term trends and for a unique set, and that's what that's really meant for, not the sort of, I need to be able to find my comps, I need to look at city level history, and occupancy, ADR, RevPAR, supply demand. I wanna
Yeah.
be able to do all these filters that we sort of outlined, like, all that is included in the basic and pro, and for the vast majority of hosts, that's all you're gonna need. If you're maybe I'm getting up to the 50, 100 property levels and you've got your own systems, you wanna be able to export the data out of AirDNA and bring it into your own platform, that's what we've really built the advanced tier for.
Perfect. Perfect. So, I mean, a lot of what we've talked about and seen here is helping investors invest with data. But I know there's a dynamic pricing feature. When is it out, or when can we expect to maybe see that? And how does that going to help us?
Yeah, so as of now, our dynamic pricing feature is live, and it has been live. So these are some properties that, and one some friends manage and other these are my parents' houses up in Maine. But when I go in here to manage a listing, one is if I want to see AirDNA's suggested rates for my property on any given night, I can see that. So I can set my base rate. I can set min max, I can set orphan night discounts, I can save those changes and then see for over the next 365 days what we suggest the rate to be. Over the next month, we're launching a channel management integration. So you're going to be able to push these rates directly to Airbnb. And we're going to have a whole bunch of additional features around putting in overrides, putting in minimum stay, cleaning fees, sort of all the additional functionality that sort of a more robust dynamic pricing engine has is all rolling out in 2023 and should be live within the next month or so. So, really exciting stuff coming there. We also have the ability for you to set the and select the properties you want to use in your comp set. And then with that comp set selected, now you can look at forward pacing for both your property relative to the other properties in the comp set. So, when are people getting booked? How are they pricing their unit? So, my rate relative to the available rate in my comp set, the booked rate on my comp set, what it was booked last year. I can look at the market as well as my comp set and what they're pricing at. So lots of ways to sort of dig into a forward view of how people are pricing, how I'm pricing, how AirDNA is suggesting that you should price it. And all this data is fully exportable into Excel so you can use it how you want.
That's great. And is this, an additional add-on to the
Mhm.
subscription for AirDNA?
No, all this is included with a pro subscription. So
Okay.
here you see all of our pricing rules, override, dynamic pricing. You get you can see the prices on their basic tier, but you'll be able to push those to the channels, do all the overrides, all the things like that, and real heavy listing for dynamic pricing under the pro tier, which is $25 a month.
Okay. Well, and that is a distinction because there are other solutions where they charge that price per unit or, whatever. So, sounds like at that time of recording here, it's included and encompassed. So,
Yep.
that's great. I'm glad I asked that. People are probably would probably want to know the answer to that question. Anything else? I mean, this has been amazing, but I don't want to cut you off if there's one or two other things, but I think this is fantastic.
No, I think we've probably overwhelmed people enough with the all the new features that have been relaunched and launched over the past few months.
Well, thank you so much. And, kudos to you and all of the team who worked so hard to pull this together. And it's really exciting as we talk, hearing the roadmap that is still in the works. And so it's going to be really fun to continue to watch AirDNA evolve and to serve us. So thank you so much. And I appreciate the time that you've taken to educate us and to share a little bit more about AirDNA. So again, if you are interested in this, Jamie, why don't you tell our listeners and viewers one more time how they can connect up with their DNA?
Yeah, so and all the information's on our website, airdna.co. There you can find how to subscribe. I suggest to everyone create a free account. You get a ton of data and access just for free, just for registering. So play around with that. You'll see the additional paid features. But our goal was to make AirDNA as cheap and as accessible as possible so everyone could have an account. So $15 a month gets you access to the basic data for your market so you can start analyzing how your market's performing, filter in and see how your competitors are performing and really make sure you're optimizing into your market. And we're really excited to get everyone on the platform and get the feedback.
Fantastic. Thank you so much. All right, everybody, we're going to let you guys go, but be sure to join us on our next episode where, again, we'll be having conversations with the innovators who are designing the solutions that are shaping our industry.